Altcoins might decouple from Bitcoin soon, and if that's the case, we need to talk about it because we need to make sure that you don't become the exit liquidity. Let's go. All right, before we get into it, I'm going to make a deal with you. I'm going to give you some really good information on this video. In return for that, all you need to do is hit that like and subscribe button down below. Happy 100-day accumulation range for Bitcoin as we have a look at Bitcoin on the daily time frame. Now, we can see here that we are back at the top of the range, waiting to see if price is going to break out. The positives that we have about this range is that we are holding above the EMAs, all of them, 10, 20, 50 is all very, very good. But the negative is that we have not yet release the trap traders that started the range, and that won't happen unless price breaks through. We also know that we have an equal range of liquidity above price up to about 76,700 and below price down to about 50,880. In addition to that, today is Thursday, which is midweek reversal day. It is the day that we should be looking for changes in trend if there are signs there on lower time frames. So before we get all the way down there, let's have a look at the 4-hour time frame. And again, we can see here that we've had our rises on the 4-hour time frame. This could be a sideways level 3 drop that held the 200 EMA, and we could be in the start of a new set of rises on the 4-hour time frame. If price comes back but maintains this structure, so say it stays above the 50 EMA, that could be just building the momentum for the next push through that actually does break the range next. So that is what I would be looking for on the 4-hour time frame. We do have heat map shorts, quite a high amount of them at 72,000 and 73,200. Now that's to be expected because that is the top of the range. So of course, people are going to place limit order short there. If we have a look at the heat maps, you can see here that this is a big cluster right here of those short orders waiting. The most significant one is at 72,000. And then the next one from that is the one at 73,200. So really anything in that range is where we may see stop hunts into the zone. If those orders stay there and get picked up, it could cause a rejection from there. However, you have to be a little bit wary at this point in time that especially this one up here, the 73,200, that really could be a trap because if you look left and see how long those orders have been there, that's not really normal for heat maps to sit there for that long. That usually does signal a trap to have people believe that price is going to A, head there, but B, reject there, open their own shorts just below it. And then as soon as price gets very, very close to it, these orders get pulled and price just shoots through to the upside. So I would not be banking on shorts at this range right now simply because the shorts are there. If that's your only reason, that's not really a reason. I'd be very, very cautious of this. And that's why I'm saying on the 4-hour time frame, if we maintain above these EMAs, I would still remain bullish, expecting that any pullback is just a pullback to build momentum to eventually build the energy to drive through all of those short orders that we're seeing. The other factor that we have to consider is the timing, because on the 1-hour time frame, if we're having a look at the timing, we know that we run a 3-day trend after false move week beginning, and then we expect a midweek reversal. Now that doesn't happen every week. Some weeks can lead to continuation, and there are other factors that we have to think about, which I'll get into in a second. But if we look at this, you can see that we've generally had an uptrend all of this week. We have broken above last week's high of the week at 70,750, and that kind of sits around the 50 EMA as well. And at this point in time, price is holding above there. So the test is really going to be to see what US does today. UK's job is to run a trend, which is what it's essentially done, kind of a consolidating trend, not a big move in UK today. But if we maintain that high of the week, US might open up with that final false move to the upside. But what I would say is if US opens bearish, then I'd be looking for the break of the high of the week. Because we've held it for so long now, the only way to flip bearish would be a break of the high of the week, which would also inevitably break the 50 EMA, retest that and fail to get back above it. That's when you would would expect that we are going to head down from here. And that would probably be a better spot to open shorts based off the daily accumulation range than just opening shorts where we are right now, because we are at risk of them not dropping price below the high of the week and instead shooting up to the upside. But I want to turn to the dominances now, because this might be giving us a hint of what could potentially happen over the next couple of weeks and where our attention should flip to. So what I have on the left side of the screen here is the Bitcoin dominance. In the middle is USDT dominance. And on the right-hand side is the total market cap, excluding Bitcoin and Ethereum, because this helps me to understand what's happening with other altcoins. Now, when we have a look at this, we can see on the left here with Bitcoin, been in a downtrend. And if I expand that chart and we zoom out to the daily on it, you can see here that we're in this ascending triangle. The ascending triangle tried to break out, it was a bit of a false breakout, tried to repeat the level. That gives us an M formation, dropped below the 50 EMA and is now retesting the 50 EMA. So if the dominance continues to drop in Bitcoin, then all that really means is money's shifting out of Bitcoin. So that's when you have to go on the investigation to figure out where is it shifting to, because wherever it's shifting to is the opportunity. So we know that Bitcoin is at risk of potentially breaking down further. The other thing too, though, is it is holding this trend line. Now, I personally don't really consider trend lines, but this one kind of lines up with the 200 EMA. It would still make me actually bearish, to be honest with you, because price of the 50 EMA, when it rejects there, we expect it to go to the 200 anyway. So that's still bearish. The only way I would turn bullish on the Bitcoin dominance is if it got back above the 50 EMA, retested it, held it, and then I would expect that, okay, it's going to break through next. So unless that happens, I'm actually expecting the Bitcoin dominance to break down. So if it does, then that's when I need to ask myself, okay, well, where is it going to go next? So that means I'm going to turn my attention to the USDT dominance, because that's going to tell me if people are risk on or risk off, essentially. And we can see out of this triangle here, it's broken down quite a bit and it still continues to be creating lower highs and lower lows at this point in time. So if we were going to shift back into USDT, if people were just going to be like hands off crypto for a little bit, then we would want to see that USDT dominance start to change trend and rise, which it hasn't done at this point in time. Is this here a potential beginning of a W formation after that breakdown? Maybe, but there's nothing for me to show me that yet. I would at least need to see the dominance get back above the 50 EMA. So I'm not too worried about people coming out of crypto completely based on the USDT dominance, which means I now need to go and have a look at the total cap minus Bitcoin and Ethereum. And this is where we are on the daily for that chart. And this is an old drawing where we had a potential that it was going to hold, needed to see what happened if it got back into this red vector here. If it rejected, we'd be looking for it to break the trend line next. If it didn't reject, then we're just looking for it to continue trend to the upside. So this was drawn quite some time ago. And when we have a look at it now, we can see that this scenario has not happened. I mean, it's still at risk of happening until we get right through this red vector. It's still at risk, but it hasn't happened yet. But this one at this point in time does look a little bit more likely. Now, if I move that out of the way, I want to show you one caution about it. And that is that at this point in time, there's 2 rejections into that zone. So I would be looking to see if it can't get through it now, then again, we go back to the drawing board to figure out where is the money shifting to, because if it rejects again and starts to head down, the money's not shifting into altcoins. However, if it can finally get through this zone, that's when we know the money is shifting into altcoins and this scenario is likely to happen. So build your plan now for this, just in case it does happen, because that's how you're going to get the best opportunities. And with that in mind, we now want to have a look at some altcoins to see where those best opportunities might be.
Attention traders, the Bitget KCGI competition is just days away and you don't want to miss out on this incredible opportunity. With a total prize pool of up to 5 million USDT, the largest allocation is dedicated to the team battle. That means your best chance to win big is by joining a team. 𝗟𝗶𝗃𝗵 has assembled a top-notch team for this competition. Not only will you boost your chances of securing a portion of that massive prize pool, but team members will also get exclusive access to our trade alert. Join our team now and secure yourself a 20% trading fee discount for life with Bitget. To take advantage of this exclusive offer, head to the description below this video and follow the instructions. This is the only way to get on our team. So don't miss out. Join 𝗟𝗶𝗃𝗵 and let's conquer the Bitget KCGI competition together.
Now, at a quick glance for Ethereum on the daily time frame, we are still just in an accumulation range. Haven't broken down, also haven't broken out. It's not good, it's not bad, it's simply just accumulating. The positives to it is that price is currently at this point in time still above the 10 EMA on the daily time frame. That is positive, and there's liquidity above for them to take if they do want to shoot through for another level. Even if Ethereum came down first before it went up, anything above this 50 EMA, so anything above around about 34.50 at this point in time, would still be bullish to me, providing it bounced there, because we have more liquidity down there. We have the 50 EMA, and it would just be a partial recovery of this vector. So I'm not too worried about Ethereum having some sort of a pullback. If it does, I'm also prepared for it to not pull back at all, because why do they accumulate for so long in this range? Like, that's kind of not really normal. And what it means is that they're building up for something big, and that big may not necessarily be a guaranteed retracement back to the 50 EMA. It may shoot out to take this next. So we need to watch consolidation in smaller timeframes to understand which way that's going to happen. And so when we do go to a smaller time frame, we're essentially trying to identify where the trapped traders are, which we can see we have trapped traders both below and above price currently. So then all we can really do is try to count our levels from there, from the last peak formation that we can find within the last 3 to 5 days. So that would be this candle right here. Does look like a bit of a 1 hour time frame W formation right after false move week beginning. So that's kind of all in line. This is definitely a rise 1, a retracement, a rise 2. And we're currently at this point in time above the 50 EMA and above 50% of the high and the low of the week, which is the top and bottom of the current range. So there could be a level 3 to come. And if that were to happen, and it was to happen together with that Bitcoin trying to get into those short orders, we could see a fast move to the upside. But the same rule applies in that what would invalidate the chance of a third level rise on Ethereum on the 1 hour time frame is the fact the timing. So it's midweek reversal day. And if the trend has been up during the week, we have to potentially prepare for the trend to change soon, which would mean any drops of the 50 EMA and retest would be confirmation of that trend changing. However, again, like I said, that's not a guarantee to happen every week, and it's usually lined up with a news event. So if we look at the news events, there just isn't anything massively significant this week that could do it. So when I can't find massively significant news events that might do it, my next step is to have a look at open interest and also funding rates. Now, the funding rates are nothing to be concerned about right now. So I've already ruled that one off, and I won't waste your time with it. When I have a look at Bitcoin, so I usually really pay attention to Bitcoin when it comes to open interest and everything like that, just for a general overview of the whole market. And when I have a look at the open interest, I can see here that open interest has been rising. I'm on a higher time frame for this, but the CBD is dropping. It's dropping in perpetual contracts. It's dropping in spot as well. And it's also dropping in stable coins. So we have here basically a divergence where you have the open interest rising, but the CBD dropping, and the price essentially has been rising as well. That divergence is the market maker building positions against you and setting up for a trap. So then when I have a look at this open interest on all of the exchanges, the green here in this chart is absolutely peaking. It's record high pretty much. If I zoom in on that area, it's record highs right now, and that could lead to a major correction. Whether that's coming this week, I don't know. I can't say that. What I think we're at high risk of right now with all of this data is Bitcoin spiking into these levels here. That causing altcoins to also go on a little bit of a rally, but the rally is exit liquidity. It's short term, and what will follow is a potential massive liquidation wipeout. So I just want to be very, very cautious about that, because if that is going to happen, they will drive prices up before they drive them down. That's how they do it. That's how they trap the traders in order to do it. And the fact that we have these up here is kind of leading me to believe it. The fact that we have the dominance showing me that it's looking kind of weak in Bitcoin, but it's looking like there's a potential move. Look, even if the dominance shot up back to the previous resistance, that is enough for alts to have a little bit of a rally, but it's a fake rally So if you are interested in trading alts, I would definitely only short-term trade them right now. I'd be very, very cautious about buying spot for the long term unless you're dollar cost averaging and you're okay. If we have a big 10, 15, 20% drop to the downside, you're okay to buy more, then that's a different strategy and that would be okay. But if you're not in that position and you need to preserve as much capital as possible, all of this is telling me the only opportunities currently is short-term day trading. So if that does happen, let's go back to ETH. Providing it maintains the 50 EMA, I would expect that there will be one more rise to the upside before there is any type of reversal. If we drop it, that's the midweek reversal and it's likely we're going down from there. Solana took out the liquidity that I spoke about on my last video. It's rejected a fair number of times at the high of the week, and it's also giving us a little bit of a, well, it has given us, it's already happened, a head and shoulder pattern, but it hasn't broken the 50 EMA yet. That's the other thing on the 1 hour. So Solana might be leading a potential midweek reversal from here. What I would be waiting for is a break and retest of the 50 EMA, knowing that it took the high level of liquidity that we were watching for. Actually, let's see what liquidity is still left for Solana on high block. So we can see on Solana, there's a lot of liquidity below price and the cumulative delta is 30K to the long. So look, that's relatively high when you compare it to down here. So it is very possible on Solana that it's actually leading the trend reversal if it does continue. And there is a lot of liquidity below price for them to take if in fact we do drop that 50 EMA and retest it. So I would definitely keep my eyes on Solana. Looks like it's going to be the first mover. But the other thing that I will say, don't jump ahead and just think it's going to short now just because I said that, because we again have to count our levels. So we're looking for the last peak formation, as we always do. That's where the levels start from. And when I zoom out, that one is right here at the start of this week. We didn't break the 50 EMA with a vector here. This could be a bit of a, I would say it's more of a V shape than a W, but it's an irregular, imperfect kind of break. If that is going to be counted as level 1, then this would become level 2. And then this little spike here could be the level 3, the final rise into it. I'm just not 100% sure if I would actually count this as level 1. The only thing really that's going to confirm that for me is if we do break below the 50 EMA, then I'll say, yeah, that move is over. So just know there's always 2 ways to enter when you're trading this system. One is to try to enter the second peak of an M formation, or in the case of a head and shoulders like this, the second peak of the M formation is just the right shoulder of the head and shoulder anyway. Okay, so head and shoulders is essentially the head and the right side of the shoulder is your M or W formation. So it's the same thing. And usually you would enter off the second peak, but you've got all these other things to consider, like stopping volume candles, your levels, etc., etc. So I don't see a stopping volume candle here as the point that I'm trying to make. And so that's why when I don't have the perfect condition to enter a position, which I don't because I'm missing that stopping volume candle, then I would take a more conservative entry. I'll let it go a little bit longer. And the conservative entry is after you get that M formation and price drops a 50 EMA with high volume, then it retests and fail to get back above. That's your conservative entry. So in a case like this, then usually I'm an aggressive trader and I will take this one. But in a case like this, where I'm a little bit unsure because I'm just unsure about the level count here on the rises, I would wait for a conservative entry on Solana. Now, when we zoom out on the daily, there is something else to be cautious of, and that is that the daily has had the W, it's had the retrace and is trying to move up now. So that little move that we spoke about on a smaller time frame could very much just lead to a little retracement that continues the rise through here. So just be aware of that. A little retracement on a day trade is still fine. There's still money to be made in that, but I would not expect it to be long-term bearish based off what I'm seeing on the daily time frame. Basically means that if you do catch good shorts on this on smaller time frames, be sure to lock in those profits because they may not lead to something massive. Now, looking at BONK on the daily time frame, we've basically repeated this level twice here, or wicked into this zone twice. If this was going to have a major pullback, I would be looking for a lower high next on the daily time frame to tell you. Now, that would mean whilst it's building that lower high from here into wherever the lower high gets built, there could be short-term day trade longs into that. But if you do that again, I would be zooming out at your take profit zones to have a look at what's happening at the daily time frame. And if it does reject anywhere there, take those profits and would be an easy bag flip to short it back down. The other thing is, if it doesn't come back to give us that lower high and a better entry, just see what happens if it comes back to the 50 EMA here, because this this 50 EMA also lines up with this vector here. And again, if we are going to have that altcoin rally, part of the false move into Bitcoin, we may get a little bit more pullbacks on this rally to give us better entries than where price is now before we move to the upside. When I look at it this week, again, W formation right here, rise, big deep retracement, rise 2 here, retracement again. So anything that pulls back from here, I would be zooming out to see if those pullbacks are creating higher time frame, higher lows to give you nice low entries for a potential short-term altcoin rally. That's the conclusion that I draw from this technical analysis. Doesn't really matter what you're looking at. Just zoom out on the week, look for your W formation, count your rises. If it does look like there should be one more, then you're essentially just looking for the cheapest price to get in, providing Bitcoin doesn't start to look overly bearish. And if Bitcoin and the altcoins are going to decouple because of this, then look to Solana and Ethereum to make the moves first, and then look to the rest of your altcoins to get your low entry good buy positions.